Welcome to TimeWise Financial's February webinar on the future of long-term care. And this is a topic that I am very passionate about and an area that is sometimes overlooked when you're making plans for a successful retirement. So today we're going to cover some popular misconceptions versus the reality of planning for long-term care, what the financial impact of long-term care actually is on retirement, and lastly, what your long-term care funding options are. When planning for a successful retirement, it often requires delving into areas that aren't very fun to plan for. So most folks get excited to plan for traveling and hobbies and spoiling the grandkids, buying a boat or a second home, visiting family and friends, or crossing off those bucket item lists when they're in retirement. Those things are super fun to plan for, right? But as retirement planners, we try to look for possible deficits in the plan, and sometimes that leads to areas that may not be nearly as fun. So things like end-of-life planning. And so for the last 2 years, we have struggled as a country through an unimaginable pandemic, the tragic loss of lives, jobs, and what our normal way of life is. And it's been the most socially, emotionally, and financially strained time that most of us can even remember. But a silver lining to the pandemic is that it's forced over 30 million Americans to start having conversations of what it might look like if they became incapacitated as they age. End-of-life planning, while not as exciting as a boat, is an important piece of your overall plan. And like Kimani said, long-term care planning has moved from more of an if situation to more of when. So thanks to modern medicine and a push for more healthy lifestyles, on average, we're all living a little bit longer. And life expectancy was 47 at the start of the 20th century, and it's projected to be close to 85 by the year 2050. There's also a massive baby boomer generation that have already retired or getting ready to retire soon. And COVID has accelerated those types of retirement trends, and add that together, with the rising costs of healthcare in general, the focus on long-term care is greater than ever. So when we start talking to clients about long-term care, sometimes they sort of gloss over, not many people enjoy talking about insurance. There's no immediate reward for insurance. You're paying for something that you don't get to touch or see or use for a long time. And sometimes we get clients who actually have taken care of a family member during their end of life, and they understand the importance of planning for this. We like to educate our clients on what exactly long-term care is. And Lincoln Financial did a great piece on pointing out some misconceptions about long-term care. And what I'd like to do is go through these misconceptions and talk a little bit more about what the actual reality is. The first misconception is, it's not going to happen to me. So we mentioned before, the reality is that 7 out of 10 people are going to need care as they age over the age of 65. We buy homeowners insurance in the 1 in a million chance that our house burns down. So keep that in mind when you now know that you've got a 70% chance of needing care as you age. Medicare and Medicaid. The next misconception is, well, Medicare and Medicaid are just pay for it. Most long-term care is something they call custodial care. And your health insurance and Medicare don't cover custodial care. And you can see here that Medicare will cover some skilled nursing, but after 120 days, you're on your own. Medicaid is even more limiting, and we'll discuss that a little bit more here in a bit. Next, let's talk about relying on family. The misconception of my family is going to take care of me is far from what the reality ends up being. There is a significant impact on families, like the emotional and physical burden, like those that are providing care are twice as likely to experience depression or anxiety, sacrificing of time, the financial costs, and the potential of lost earnings. And women are significantly impacted when it comes to providing care to a family member, as they're the ones that are more likely to be the ones who are responsible for providing care. The biggest misconception we see is that's what my savings are for. So I'd like to dig a little bit deeper into what the reality of the cost of care is and how that could financially impact a successful retirement. First, some states are recognizing that the potential of financial strain on the state finances with Medicaid. And some states have been entertaining bills to create a long-term care fund via a payroll tax that would establish essentially a long-term care insurance benefit for all eligible workers and use that to address that future long-term care crisis. Now, it is totally unclear whether they're going to get those bills passed and up and running, but it is something for us to keep an eye out on for the future. A really interesting survey was completed by Edward Jones and AgeWave during this pandemic in 2020 and 2021. And they asked retirees about all the things that they felt were important to them and what their worries were and what they thought made a successful retirement. And those Americans surveyed said that healthcare costs, including long-term care, was one of the top financial worries that they have. The insurance company Genworth did a cost of care evaluation, and they figured out how much long-term care costs are in each state. The national average for home health aid is almost $55,000 per year right now. And for a long-term care facility, it ranges between $93,000 and $105,000 a year, depending on whether you do a semi-private or a private room. Now, in the state of Georgia, it's a little bit less, but not by a lot. The median cost in the state of Georgia for a home health aid is about $49,000 and $80,000 to $86,000 a year for facility care, and that's right now. So let's do a little case study on that. Let me introduce you to Bob and Mary. And Bob and Mary are retired, and let's say that they need $100,000 of income while they're in retirement. So for this example, we're going to throw Bob under the long-term care bus here. And let's just say if Bob were to need to hire a home health aide here in the state of Georgia, that median cost is about $49,000 a year. So now Bob and Mary's annual expenses have now increased to almost $150,000 a year. And remember, Mary's still at home with their normal living expenses and needs. So let's just say Bob has to go to a long-term care facility. That median cost here in the state of Georgia is between $80,000 and $86,000 a year. So now their annual expenses have gone up from $100,000 a year to $180,000 a year. And the question becomes, do Bob and Mary have enough assets to pay out of pocket and not run out of money? These costs are only increasing over time. So for those of you who are decades away from possibly needing care, the costs are increasing nationally by an average of 3% every 5 years and closer to 4% here in the state of Georgia. So this brings us to our last topic of, okay, so how do I plan for this? What are my options? And there are a couple different long-term care options out there, and you can work with your financial professional to plan for which option might be the best for your needs. So the first one everybody wants to talk about is long-term care insurance, and you can see my little grid there. Long-term care insurance is the luxury option. It's the Cadillac option, right? And long-term care policies are notoriously expensive. And there are two kinds of policies to look at: hybrid policies and traditional policies. And they both will get you tax-free income to help pay for qualified long-term care expenses, but there are some major differences between the two. The biggest differences are the death benefit, premium increases, and return of premium options. So you can see there in the chart for a traditional policy, the premium frequency is you pay a premium once a month for the rest of your life, whether you use that policy or not. With a hybrid policy, it's a fixed amount, and you can pay it in one single giant premium, or you can pay it in installments. The potential for premium increase with a traditional policy, they can raise the rate on you at any time without notice, and they have done consistently so for the last 7 to 10 years. With a hybrid policy, you lock in the rate on day one. They cannot raise the premium ever on that. Return to premium option. So let's just say you get a fatal illness and you want to change your mind and take that money back out and go travel and do some bucket list stuff in Europe with that money instead. With the traditional policy, you are out of luck. With all those premiums you've paid in, you can't take those back out. With a hybrid policy, it's a lot more flexible. You can get a percentage of the premium you paid in back out. That kind of varies by policy. The death benefit is one of the bigger issues and differences between the two. A lot of times people pass away before they ever even get to use the benefit. With a traditional policy, you're out of luck. If you pass away before ever needing care, all of those premiums you've paid are basically gone into the wind. But with a hybrid policy, you have the option of adding a death benefit. So if you were to pass away, your heirs would receive a death benefit. So no matter what, you're essentially getting your money back. The other option I mentioned earlier was Medicaid. And so I wanted to touch base on some points about using Medicaid to pay for care. This is kind of our last ditch option for folks because Medicaid is a government-run program and they have very strict rules for qualifying for aid. You can see there what those income limits are. They have asset limits and certain criteria for qualifying for critical nursing or long-term care facilities. Now, the good news is that they don't count your primary residence as a countable asset, but all other assets have to be under a certain dollar amount, like $4,000 if you're married. So it's a very limiting option. So let's talk about some other funding options. The first is self-funding. That's a bit self-explanatory, but that means that you're saving enough in order to pay out-of-pocket expenses as you age. And that is an option for that not a lot of people can obtain. So we start looking at other options. One is veterans assistance. Is if you are a disabled or aging veteran with long-term care needs and spouses, you may be able to get help from the United States Department of Veterans Affairs, and their benefits help pay for care in VA nursing homes and sometimes in certain services at home. The most commonly used option is the primary residence. Basically, you're leveraging your primary home in order to fund for care. And this is used when there's no other assets to use and the person that's needing care isn't going to need that primary residence anymore and is being moved to either an assisted living or a long-term care facility. So the house or the primary house is sold and those proceeds are used to help fund for care. And the last option there, and you've probably seen commercials on TV, is reverse mortgage. These are not for everyone, and you need to consult a financial mortgage professional for guidance on these. The Consumer Financial Protection Bureau calls reverse mortgages complex products that are typically difficult for consumers to understand. And they know that too many people apply for these without enough cautionary counseling and clear information. So with reverse mortgages, homeowners are still responsible for paying the real estate taxes and for maintaining the property. And also the cost of reverse mortgages can be really high. And consequently, that starts eating into some of the equity you built into the home. And what ends up happening is the better alternative, maybe just selling the house and using the proceeds to pay for long-term care.
Thank you so much, Kate. That was awesome. That was such good information that we all definitely needed to hear. And so this is the time, if anybody has any questions, you can go ahead and put your question in the chat and Kate will answer it for you. Kate, I had one question. You had mentioned the death benefit before with some of the options. Can you so with a certain option, and it looked like the hybrid option, if you pass away without using the long-term care insurance that you have paid into, then that means that it goes to whichever beneficiary that you choose. Is that what it was?
So a hybrid policy is exactly what it sounds like. It is a life insurance policy with a long-term care rider built into it. So essentially, you are purchasing a life insurance policy, and it's, best case scenario is that if you were to pass away, your beneficiary would receive a death benefit that would more than likely be more than what your total premiums amount that you put in it is. And that kind of is it kind of kills two birds with one stone a lot of times. For people that have life insurance, they've been paying on another premium for another policy. Sometimes we can knock out two birds and say, all right, here's a level death benefit and long-term care, and you pay one premium versus two separate.
Yes.
Those hybrid policies offer a lot more flexibility.
Mm-hmm. And if you, upon your death, is that going to be money that your beneficiary is receiving, or is that like can it be used to be a long-term care policy for them?
It would be just like a life insurance policy. It would be money that your heirs would receive. Now, there are different kinds of hybrid policies, and there's some companies that offer a joint policy for spouses that they pool money together to use instead of each one having an individual policy. Those are options. They may not be the best option for everyone, but there's all sorts of different kinds of hybrid policies out there that we can look at.
All right, awesome. Thank you so much. It does look like that was really my question. And then it does look like we don't have any other ones. So you did a great job explaining long-term care and these different policy options. And so we will email a replay of this webinar out. And so please, if you need to, rewatch it, but definitely be thinking about any friends that could benefit from this information and share the replay of the webinar with them. And if you have any questions about long-term care insurance, please contact our office. Our advisors would be very, very happy to speak to you and to answer any questions that you have. So thank you so much for joining us. It looks like we're going to be done a little bit early today, so enjoy the rest of the day, and we will see you soon. Bye.
Bye.